So often, I hear people say, oh, you can't gift that much. There's a limit. But I'm here to share with you today that anybody can give any amount to anybody they choose at any time. It just comes down to paperwork and whether or not there's any taxes involved. So let's get started. Everything you need to know about gifting. Now, you can gift anywhere from 1 penny up to $15,000 per person per year, and there's no tax and no paperwork involved. Now, an interesting technique is if you are a married person, you and your spouse can both give $15,000 per year to a single individual, and once again, there's no paperwork and no taxes. If the person you're giving the money to is also married, let's say it's an adult child who's married, well then you can actually double that again and you can give up to $60,000 per year from the two of you to the two of them. Once again, no paperwork, no taxes. Now, what if you want to give more than that amount to somebody? Well, you can do that as well. Giving amounts of $15,000 up to $11,580,000. Yes, I said $11,580,000. You can gift as much as that in 1 year, and it is not taxable. You do have to do paperwork. The paperwork is IRS Form 709. It's simply to report that this gift was made, but it does not incur any taxes upon you as the giver or any taxes upon the receiver either. So anywhere from $15,000 up to $11,580,000, there is paperwork, but there is no taxes involved. So what if you're going to give more than these amounts? Well, if you're going to give more than these amounts, then it is both reportable and taxable. You have to report it on Form 709, and then you have to pay estate tax on that. Not income tax, but estate tax. Now, currently, the estate tax rate is set at 40%. But there is some discussion about a possible change involved with that, maybe going back to what it was before at 55%, let's hope not. But it's only on gifts exceeding $11,580,000 from one individual to another. So how much can you give? A heck of a lot. Now, sometimes folks will say, well, Matt, I'm going to get around this by selling this item to my child for $1. I see this with family farms, and actually that's a big mistake. And the reason why it's a mistake to sell things for $1 to your child is it is lowering the cost basis. And what I mean by that is if your child goes to sell this asset at some point in the future, they'll then have to pay capital gains tax on everything over $1. So you're actually avoiding a tax problem you don't have at this time and creating a tax problem in the future for future family members when they go to sell this property. So don't sell stuff for $1 unless it's something you bought from the dollar store. It's probably a bad idea. Some folks will say, Matt, I'm just going to put my kids on as joint owners. That will fix the problem, right? Well, not really. That actually creates more problems because what if your kids go through a divorce? What if your kids have an accident and they're at fault? What if your kids go bankrupt? Well, because their name is on this asset with you as a joint owner, well, part of the asset goes away to settle their debts. Or maybe part of the asset goes away with a former son-in-law or a former daughter-in-law. We call them the outlaws. So you don't want to do joint ownership with anybody other than your spouse. Keep the outlaws out of your accounts. Now, sometimes folks will say to me, Matt, I'd really like to do gifting to the grandkids. Is there a right way and a wrong way to gift to the grandkids? And the answer for that is yeah. The wrong way is to put money into a bank account that's in their name. And the reason why I say that is it counts very heavily against your grandchild when it comes to their financial aid package for college. For every dollar that's in their bank account, their aid package is reduced by 35 cents. So if they keep that dollar in their bank account all 4 years in college, it actually reduces their aid package by $1.40 for every dollar that's in their bank account, or that's in their mutual fund account, or that's in any type of account that's owned by that individual. So a good alternative to that is the 529 plan. It's like a Roth IRA for students. It doesn't count against them when it comes to financial aid for college, and you can actually gift up to $150,000 and not have to fill out that form. Remember we were talking earlier, you can give $15,000, no paperwork, no tax. Well, for a 529 plan, they bump that up. You can actually gift $150,000 all at once in 1 year to a 529 plan and not have to report it and not have to pay tax on it. So there you have it, a couple of quick guidelines on the do's and don'ts when it comes to gifting. If you'd like further information, click on one of the links of related topics below, or send us an email and pick up the phone. We're happy to provide individual one-on-one consultations. Just let us know how we can help. We're here for you at Taylor Retirement Services.